prosperous year for you all. It only takes 1 year. 1 year you can completely turn your life around. So this year, dig deep, remove the distractions, and really focus. And your future self will really thank you for that. So I do wish you the best of luck. Just to quickly update, because there's a lot of people who are really confused about the direction of the mentorship. So to make things simple, I want you all to cancel your subscriptions from the website. So you're not charged next month as I'm weaning the mentorship off. Pretty much all the targets we had outlined for last year have been met. So I'm really waiting for the market to really present me with an opportunity, and I'm waiting for more information. Everybody who is currently in the mentorship, in the actual Discord, if you haven't joined the Discord and you've purchased the subscription, then create a help desk ticket in the Discord, and one of my staff will be able to give you permission and access to our private group in the Discord, right? Now, everybody's going to remain in that private group, and I'm going to have a separate channel for my analysis. All of you guys will get that for free. At the minute, you cannot access the mentorship because it's been removed from the website, right? So there's no new students coming in. Anybody who's going to come into the private Discord is going to be paying a subscription. But because you guys have been here, as a thank you, I'm going to give you that for free, right? Now, despite that, I've still had people who are complaining and writing long paragraphs to my staff. Just to be clear, like, I understand it's not the most ideal thing, and I appreciate you guys wanting me to continue to teach you, right? And I knew I was going to get a few people who complain, and I've already outlined the reasons in the last mentorship video why I'm closing the mentorship. Unless you're sleeping with me, right? Your opinion on whether I should continue or not, it doesn't really matter. If you're going to send my staff long paragraphs and whatnot, honestly, I'll just kick you out the group, right? The best I can do is offer you free access to the private group and to the analysis that I'm going to be doing. But I have to do what I have to do for myself and for my family, right? Most people have been supportive, to be honest with you, and thank you guys for the comments and stuff. I am gutted, to be honest with you, because I really had a lot more plans to do with the mentorship, and I went through all the headache of moving everybody over onto the website. It's life. Sometimes things happen, and you have no choice but to pivot sometimes. And that's trading also, right? You're going to find times where you can't get in front of the charts for whatever reason because you're busy. The last quarter of 2023, I was that busy, I didn't get a lot of chart time. So I've had to force myself now to rethink my own personal trading. And I've made the decision to move from day trading and session trading, which I've done for the last 4 or 5 years, really, to swing trading and more longer term trading. Just because I'm that busy, I can't get in front of my charts all the time. There's personal circumstances and things that I have to do with my own family and things, which prevents me now doing what I want to do and being at the charts at the time that I want to be at, right? And that's life. I had somebody who asked whether I would release the archive of mentorship videos, and I am planning on doing that once I've got everything more organized. I will do some sort of a package where it's a one-time payment on the website, and you'll just get access to the last couple of years worth of mentorship videos that I've done. Because yes, there is a wealth of information in those, and between the academy, the market maker model course, and the archive of mentorship stuff, you have more than enough information. And of course, with everything that ICT's put online, whether you choose to follow him or not, but there's a wealth of information that you already have, and you don't need me to hold your hand for the rest of your life either. You have way more than enough information for you to now backtest, journal, and find what works for you. Had I had known that I was going to be in the situation I'm currently in, I would have obviously stopped the mentorship sooner. But now it's going to force me to pivot, and I'm going to do things with the private community to really build the engagement and include other things. Like, I'm going to hopefully at some point have a channel for seasonal tendencies, and there'll be prizes and a leveling system and a news event calendar, and obviously the analysis. We've got the coaches, we've got the community. I'm going to be doing monthly giveaways for prop firms, and which you guys are going to get all of that for free, right? And unfortunately, that's the best I can do given my own personal circumstances at the minute. Everybody who's currently in the mentorship will get some sort of a discount to the mentorship archive. I'm hoping to release that within the next month. In February, March, I'm planning on the bootcamp, which will hopefully be around 12 weeks. And you guys are welcome to join that if you would like. It's more foundational. It's not going to be as detailed as how I make the mentorship. Many of you probably don't need to join it anyway, but obviously that's entirely up to you guys. I have a whole host of stuff for YouTube, and a couple of things that I'm working on where I'm going to be doing a lot more free stuff and just providing a ton of value. There's a podcast, there's free courses I'm doing, there's something I'm currently working on. I'm going to hopefully do it once a week on Twitter, where I may be co-hosting a Twitter space with Kit, ICT Concepts. So we're in talks going back and forward, but there's just a whole lot on my plate. And Unfortunately, sometimes that's just the way it is. I can't do everything. As much as I would love to continue doing the mentorship, it's just by far the most time consuming thing that I'm doing at the minute, right? But yeah, on a whole, most of you have understood and you've been quite supportive of it, so I do thank you for that. I know I sound a little drugged up right now, it's because I am. I've come down with something over the weekend and got a bit of a sore throat going on as well, so I hope you guys can at least understand me. Anyway, let's go through some charts just to get a feel for what's likely to come over the next month or two. Here we have the dollar index on the monthly time frame. Now we have these 4 consecutive up close candles, and this is one order block. If we split that range in half, we get the mean threshold. You can see how we failed to close back above the mean threshold, and prices rejected this area and ran away. We also have from this candle's low to this candle's high, we have this sell side imbalance. Since this is a very high time frame and this is quite a large range, we grade that range into 4 quadrants. You can see how price here failed to get above the first 25% quadrant. And again, that was just showing weakness for the dollar index, and price really rolled over. So we didn't have the legs to get to consequent encroachment, and this is an indication that price is heavy, right? And again, this is just for all time frames, not just on the monthly time frame. I still like this area down here where we have this swing low and we have the remainder of this buy side imbalance. Noting the consequent encroachment of this wick, I want to see if we get a bounce from here, which is probably likely. If we move down into the weekly time frame, you can see inside of that monthly balance price range, we also had this buy side imbalance over here. If we extend that across, price was failing to close inside of this level. And we also had this small down close candle over here. If we extend that across as an order block, you can see how, again, the body's here telling the story. We then really displace and close back below this purple line here, which is the discount end of that monthly fair value gap. And then look at the bodies here again. Price was failing to get back inside of that monthly fair value gap. And then we again displace lower. We ran back up into this sell side imbalance a couple of times over here. Bodies again failing to get any higher, so it was again indicating weakness. And then we broke back below this swing low over here. So I would ideally like to see this stay open as a breakaway gap. And I want to see price gravitate back towards these relative equal lows down here. And again, the remainder of that buy side imbalance on the monthly time frame. I'm also interested in this buy side imbalance over here. If we extend that out, this is going to act as a balanced price range since we've moved back and forth inside of this range quite a number of times now. And inside of that range, we have this up close candle and we have this sell side imbalance over here, which also overlaps with the discount end of this buy side imbalance as well. Looking at it on a daily time frame, I want to see if we can gravitate back towards this area, right? Inside of this area, we have this volume imbalance, again, something that I highlighted in a previous lecture. I want to see a reaction from here to send price lower, back down to that monthly fair value gap. So I'm expecting some sort of a retracement before we continue lower, if we continue lower. This is very clean up here, but I would rather see this left open and price just remain heavy. Since we've already spent time in this area mitigating, and then we ran away from this area, I wouldn't want price to come back up to here. And like I said, I'd like to leave this area as a breakaway gap. It's less bearish for me if we come back up here and close this. It still doesn't mean that it can't do it. It can still go up here, rebalance, and then continue lower. But based on market structure and based on what I can see in other assets, I'd like to see the dollar continue heavy and not reach up into this area. Looking at the euro dollar on the monthly time frame. So we ran sell side liquidity down here and really dug into that, right? And we created 1, 2, 3, 4 down close candles that really drove into that liquidity. So this becomes our bullish order block, right? We have buy side liquidity resting above these relative equal highs. So for me, I like this as a buy side draw, as a longer term buy side draw. I'm looking at this up close candle here as an accumulation block. I'm taking the whole range there, and if we split that range in half, the mean threshold of that accumulation block, look at the bodies there, really respecting the mean threshold of this accumulation block. We are also accumulating inside of the premium end of this order block, so these consecutive 4 down close candles. Looking at it on the weekly time frame, I think that we're likely to travel back towards the buy side liquidity above these relative equal highs. We've already cleared sell side liquidity down here, and we've pushed higher, found support on this down close candle, and again ran away from that area. We're currently at the discount end of this volume imbalance. Looking at the daily time frame, I think that we're likely to gravitate back towards this fair value gap over here. I think this trend line is far too clean, and if I am expecting higher prices on the dollar in the short term, then that would translate to lower prices in the euro dollar short term. I want to see a reaction from this area. If we reach it, we might not. This might stay open, and that would be even better. We do have a small fair value gap over here as well, and that nests inside of that breaker. So I would want to see how price is going to react if we get into this level and then potentially run higher. We're currently inside of this larger time frame breaker, so we have our low, high, lower, low. And if you are familiar with ICT's work, he doesn't need price to run above a breaker and then come back down into it. Although we could see that happen anyway. We could run higher and come back down into this volume imbalance, which also overlaps with this breaker, and then you look for a long entry over here. British pound, again, similarly, we've ran the sell side liquidity, and now we have the buy side liquidity above these relative equal highs. I like how we didn't close below the mean threshold of this down close candle, found support on it, and then really ran higher back through this sell side imbalance, really closing above it there. So we dipped into it, found some support. We have this down close candle over here. This will become a reclaimed order block. And above this high, we have this sell side imbalance that still remains open. So we've got a pool of buy side liquidity with an imbalance above. So again, the analogy I use, two birds with one stone, this for me would be the next likely draw. Again, we may want to retrace a little bit lower before we go back higher. We do have this buy side imbalance here, but this overlaps with this sell side imbalance. So we have a balanced price range. Again, I'd rather it stay open. Looking at the weekly time frame, most of this I've really explained in last week's lecture, and there hasn't really been much movement since, to be honest with you. Again, just going over the Christmas break. I like how we've dipped into this volume imbalance and then ran away from this area. We've rebalanced this buy side inefficiency, so I would ideally like to see price stay above this low and find support inside of this down close candle. We have been finding support inside of this accumulation block. Again, I'm sure I mentioned this last week, which again all supports the idea of higher pound. We also have this volume imbalance up here, so it looks like it just wants to gravitate higher. This will be a strong draw for liquidity. And then we have the relative equal highs up here. Unless things changed, of course, which it can happen, especially in the current climate that we're in, I still favour lower dollar, higher pound, and higher euro. Now, looking back at the dollar index, I have this dotted line delineated here. So this was Monday, this was Christmas Day, and this is what's transpired since Christmas Day. If we go onto the hourly time frame and we zoom in here, so Monday, Tuesday, we basically consolidated inside of this range from this high down to this low, which is expected really for it being Christmas and Boxing Day, right? If you notice the bodies, how they were staying below this blue line, which was the old sell side liquidity pool that we had outlined, the body's really telling the story. We dug up into it one more time on Tuesday before we made the rally lower. On Wednesday, we had this actual gap, which overlapped with this up close candle over here, and we were digging into that a couple of times before price really rolled over and sunk lower. If we take the high to the low on this wick, 2.5 standard deviations almost nails the very low that we get on Thursday. These consecutive down close candles becomes an order block. We have our change in state of delivery as we pass the opening price. We run back lower into the order block, which is validated by this small fair value gap over here. We completely rebalance that, and then price really explodes higher into our fair value gap, which sits at equilibrium of the range high to the range low. If we grade this in 4 quadrants, you can see at the 25% quadrant we get the gap. At equilibrium, I'm noticing this small fair value gap over here. If we take the low to the very premium high of that fair value gap, 1 standard deviation takes us right into this small sell side imbalance over here as well, which takes us above these relative equal highs. So there's a big pool of buy side liquidity above this. I think we probably might overshoot it, but as a low hanging fruit objective, I think we're likely to draw back inside of the range and rebalance this sell side imbalance and clearing up this liquidity at the same time. So that's obviously going to put downward pressure on both the euro and the pound, which is something that, looking at our analysis, is what we expect anyway. Whether we continue going higher on the dollar at the minute, it doesn't look convincing. I think we're just going to likely retrace higher just to go back lower. And the relative equal lows on that daily time frame is the longer term objective for me, right? If we zoom in here on Tuesday, I don't know why I said this is Tuesday. This is Thursday's price action, so ignore that. This is on the 15-minute time frame. So you can see how we ran lower into London, sweeping the sell side liquidity below this low. Now, the change in state of delivery occurs when we get back above the opening price of this down close candle, right? Because these 2 consecutive down close candles was the candles that ran into that sell side liquidity pool. So these 2 candles are going to be our order block, right? Now, sometimes you're going to get cases where this is quite a large range, right? But if you look closely inside of that range, we have this area over here, right? So this is going to be our sell side imbalance inside of the order block. This is something that I refer to as an early structure break, because we don't need to see the change in state of delivery on this time frame, and we don't need to see a break in market structure above this high or this high, right? If we close back above this sell side imbalance and we have conviction that the market is likely to run higher, being a Thursday, not a Tuesday, and the fact that we've already run liquidity, we can see here how price has dipped into this order block. This order block sits inside of that sell side imbalance. And we also have a smaller buy side imbalance here as well. And now this is at the beginning of New York, and price really then runs higher, making a high in New York before retracing back lower into the London close session and into the breaker, which overlapped with the hourly fair value gap. If we take the manipulation from this swing high to this swing low, where we had the order block and that sell program that ran the sell side liquidity below this low, 2.5 deviations took us to the very premium of that hourly fair value gap. So this would have been a good target. So the best move for this day would have occurred in the London close, and you can see how obviously we had fair value gap breaker. We have an optimal trade entry here as well into a higher time frame order block. We have the mean threshold over here. We didn't go below it. And this would have been a nice 5.64 risk to reward. Our entry would have been at the premium high of that hourly fair value gap, and our stop would have been placed below these down close candles, below the mean threshold of that hourly order block as well. So I think that's it for today. My voice is really raspy, so I'm not sure how this is going to even sound playing back. But I hope you guys have found this insightful, and I will hopefully catch you guys again next week. Take care, guys. All right, guys, welcome back. So